Let's talk about what the 2020 installment of the Silicon Valley Index is telling us about our region. There it is. Ladies and gentlemen, you are looking at the most prodigious economy in the history of regional economies. That's a true statement. It's not a boostery kind of a statement. It's just a clinical observation. There has never been an economy in the history of regional economies that has had so much growth and expansion over such a long, sustained period of time. And what's fascinating to me is that when you look at it from outer space, it looks like this happy, peaceful place, perfectly sublime, and yet all of the activity that we will be discussing today is happening on this fixed landmass. Look at that. It's a narrow peninsula surrounded on three sides by water. It's ringed by mountains and permanently protected open space. Of the available developable land, it's mostly already developed. This is the conundrum that we'll be grappling with today. Now, there's different ways to think about Silicon Valley. Today, we'll be thinking about it in two ways. One is to talk about Silicon Valley as a phenomenon. And that really is how so much of the world understand Silicon Valley. When they hear the term, what they're thinking of is this phenomenon, which captures primarily two things. One would be innovation, and the other would be entrepreneurship. Those two things distinguish our region more than any other place. And so one question that we'll grapple with today is to understand how the phenomenon is faring. How is the innovation engine doing? And is it firing on all of its cylinders? We'll talk about that today. We will also talk about Silicon Valley in a second way, and that will be to refer to it as a place. The place where we live, and a fixed landscape, and what is it like to actually live on this landscape and grapple with all of the complexities to do with the growth that I will be describing. So let's plunge in. We're now going to talk about the innovation engine, and we'll talk about how that one is firing. Well, here's the first headline. We're still growth positive. We continue to grow. In fact, over the last calendar year, well, from quarter two to quarter two, we created 29,000 jobs in Silicon Valley. 29,000 jobs. San Francisco added another 19,000 jobs to that total. Then if you add the rest of Alameda County, that was approximately 4,100 jobs. And then this is interesting. You can add the rest of the Bay Area counties, 5 counties, Marin, Sonoma, Solano, Napa, Contra Costa. Those 5 counties altogether created about 3,000 jobs. Isn't that interesting? 5 counties, 3,000 jobs. Silicon Valley, 29,000 jobs. It gives you a sense of the engine that Silicon Valley is, not only for the Bay Area, but for the rest of the state and indeed the nation. So that brings you to a grand total of 55,000 jobs for the Bay Area over that 12-month period. That, by the way, is a growth rate of 1.4%. Silicon Valley's growth rate is 1.7%. Put that in perspective, the national growth rate over the same period of time was only 1%. 1%. So we're growing faster than the state. We're growing faster than the nation. I always like to put this into some context, and so there you have it. This shows you our long-term trend, and you can see that in 2009, we succumbed, like the rest of the nation, to the epic recession. And so we were, that year we actually lost 90,000 jobs. And then same in 2010. But then by the fourth quarter of 2010, we were already growth positive. And now we have mounted 9 years in a row of growth, of positive growth. It's the longest sustained expansion in Silicon Valley's history. Longer than the other waves of innovation, including the whole dot-com craze that happened around the turn of the century. So there it is, nine positive years. Now, we'll let the headline writers decide how they want to tell this story, but you can see that one way to look at it is that it's a lot of growth and a lot of expansion over a long period of time. Another way to look at it, though, is to see that, well, actually, we peaked out 4 years ago. That was a very high number. In fact, that year we generated about 130,000 jobs in the Bay Area, and ever since we've been coming down, slightly, but coming down. And so we'll let you decide if you want this to be a happy story or a sad story, but the way we should understand it most of all is that it is growth positive, and that continues to be this case. By the way, the unemployment rate is a mere 2.1%. That is something that economists will tell you is the equivalent of full employment. And so you should think of this as an economy at full employment. Now, one question is, what's driving all of this growth? And this year there was a very striking finding, and that's that fully half, 49% of all of these new jobs that I just described were coming out of the tech sector. That's not usually the case. We're a tech-heavy economy, we know that. But ordinarily, it's more like 30%, even 25% tech jobs, and then the rest of the jobs we categorize as community infrastructure, retail, banking, finance, housing, healthcare, education. This year, fully half of the jobs were coming out of the tech sector. That's extraordinary. This is showing you some of the major growth areas. This category, innovation, information products, that's what we're referring to as tech. These are people that fire electrons for a living. These are people who are doing complex software architecture and doing coding and doing all of the rest. So that's where we're growth positive. In San Francisco, that is also the case. Tech is fueling San Francisco's growth. Then we thought it was also interesting that healthcare is another big contributor to this growth, including especially the tech component of healthcare. Tech again, and then we wanted to note that biotechnology is actually growing at the highest percentage rate, 9.5%. That's really fast growth. Now, as a portion of our total pie, biotech is still smaller. 9.5% growth rate only generated 1,000 jobs. Nevertheless, it's the highest rate, and so that's going to be telling us something. In fact, we'll show you some other things about biotech when we talk about IPOs. Now, if you were curious to know how much tech accounts for the total workforce, the answer is about 26%. That's where we've landed as of the end of this calendar year. So 26% of our workforce is doing what we call those tech, specifically tech jobs. And then about 50% of our workforce is in a big catch-all category that we call community infrastructure, and that includes the things I named: construction, banking, healthcare, education, retail, and a host of those things. What's interesting, though, is that all of these categories have tech in them. And so when we say 26% of the workforce is in tech, that's really not capturing all of it, because tech is now suffusing virtually every sector of the economy. We thought you would be interested to know something about the labor force, and this, I thought, was an interesting piece of news. A lot of us think of the Silicon Valley economy as an economy for the millennials. You know, that set of people that are in their 20s and early 30s. And that continues to be the case. In fact, of our workforce, 69% of our workforce is in that core age group, 25 to 54. So that's a big chunk of our pie. And economists and others will tell you that's a good sign. That's a very good sign, because this is the so-called creative class. These are the talented people that are doing highly innovative and creative things. But I also thought it was interesting that the folks that are 55 and above are actually grabbing increasing shares of our employment total. That's good news, because for a long time we've been talking about the phenomenon of age discrimination and what that might mean for Silicon Valley. So we're making some inroads there. I want to quickly move over to another category, and that would be venture capital. This is such an important category for our region because it's our so-called secret sauce. When venture capitalists are investing, they're making bets, and the nature of those bets is telling you something about where smart people think this economy is headed. And of course, they're not always right, but it does tell you something. So here's what's happening. This is the venture capital picture. Last year, we reported this number, $50 billion. It was actually $51 billion in venture capital. That was amazing. We'd never seen anything like that. That was a historic high. It's probably too much to expect that we would hit that number again. And sure enough, we didn't. This year, we're reporting $41 billion. So again, the headline writers can decide if this is a sad story or a happy story, but I want to tell you that there's no place on the planet that can show you figures like these. $41 billion in venture capital that's being generated here and then invested in Silicon Valley companies. It's interesting to see how it breaks down. It's been breaking down roughly evenly between San Francisco and Silicon Valley, although San Francisco had higher shares this past year. We'll talk about that. We're going to break it down a little bit for you. But you should know that we claim 80% of the state's venture capital, 40% of all the venture capital in the nation is here. Now, we're always interested in what the portfolio mix it turns out to be. And this year, it turns out to be very heavy, as it has been, in internet companies. So venture capitalists are continuing to invest in those kinds of company. But they're also investing in other things, mobile and telecommunications, healthcare, and then we want to point out a newcomer. And we see this as a headline as well. The newcomer is the automotive and transportation industry. And look at that, 2.9, almost 3 billion went into that sector. That's a newcomer. That has newly emerged. And what we're talking about here is not only conventional forms of transportation, but also the unconventional, futuristic forms of transportation. We're talking about drones, we're talking about flying cars, and we're talking about self-driving forms of transportation. So the companies were This was the biggest investment. It was $1 billion. $1 billion went to this company called Flexport, and they do logistics and goods movement. But then this is even more interesting to me. This is a company that had $940 million in venture capital. It's a Mountain View-based company called Neuro, and their game is autonomous transportation. They are doing it autonomous not for the movement of people, but for the movement of goods. So they're moving all of your packages and all of your shopping and the commerce of our economy. They're moving that autonomously, and venture capitalists are standing behind them. Now, as we talk about the innovation engine, we also want to talk about patents, and that continues to be a major a story coming out of our region. If you want to know the absolute number, there it is. 18,000 patents came out of Silicon Valley over the past calendar year. You realize there's no other place on the planet that can make that kind of a statement. The number was off, slightly off, but we're not here to tell you that's a trend. We're here to tell you that mostly it's hovering right around there. 18,000, 19,000 patents come out of our region every year. And the number of patents per capita continues to climb. That's what's so amazing. In fact, over the past 7 years, it climbed 25%. Patents per capita. It's climbing even more precipitously in San Francisco, even though they have fewer patents, but their number of patents is growing at a faster rate. So that's interesting to us. By the way, I'm happy to report this. Of the top 10 patent-generating cities in the United States, 5 of them are Silicon Valley cities. And the number one city is San Jose, right here. Yes, I think that's worthy of applause. San Jose is number 1. And these are the companies that are driving that kind of patent generation. Some of them are well known. Others have a lower profile. That's the kind of place we live. It's really quite amazing. Now, the IPO story is always interesting. Here it is. This is showing you what happened with the IPOs over the past few years, and this is actually breaking them down for you across the nation. So let me just bring us into finer detail. In Silicon Valley, last year we generated 22 patents, and San Francisco generated, IPOs, and San Francisco generated 12. And that's a big number. That's actually a really big number. It's more than 25% of all of the IPO activity across the nation. So that's striking. And then what's also striking to us is that in Silicon Valley, of those IPOs, 73% of them were in healthcare and biotech. That's striking. In San Francisco, they were not in those fields. They were in just a wide range of technology fields. So that's interesting. Now, this is also interesting to us. We'll report this as a headline. This is showing you the value of the companies at the time of their IPO. And so in 2019, at the time of IPO, these companies were around 6-7 billion. Their valuations totaled about 6-7 billion. But that's not telling you the whole story. Because besides these companies that you haven't heard of, there were about 4 or 5 that you have heard of, and they are the ones that took it up to about $25 $9.5 billion in valuations. So that's remarkable. Just 5 companies were driving it up to those stratospheric levels. Now, the IPO return rate is also interesting to us this year because a fascinating contrast emerged. Here it is. In Silicon Valley, the rate of return on those IPOs this year was 53%. It's a handsome return. In San Fran, and these were the companies, by the way. In fact, some of them were just astronomical returns. Courtesign, for example, is a company with 10 employees, and they're putting out micro-level computing that gets embedded within you, and it's fighting disease. And it increased in value 218% from the day that it opened. Amazing. 10 people, you haven't even heard of them yet. All right, so that's the Silicon Valley story. The San Francisco story is very different. They realized about 0%, on their companies and that went public, and so we can think about that. But here's what's interesting. The big ones, Uber, Lyft, as you know, if you've been reading, they actually tanked upon their debut. And it wasn't just Uber and Lyft; it was also companies like The RealReal, and so it was a tough year in San Francisco, and we'll let you draw your own conclusions about that. Nevertheless, we thought it was interesting. The national rate of return is about 20%, and so here's Silicon Valley outperforming that considerably. It's also interesting that we have so many IPOs already in the pipeline in 2020. Here we are, just the second month of the year, and it looks like there's about 20 IPOs ready to go. 4 of those are in Silicon Valley. Another 6 or 7 of those are in San Francisco. We think it's going to be a big year for IPOs coming up. The unicorns, they're interesting and fascinating to count. We talk about unicorns because they used to be so rare, these mythical creatures that you never expected to encounter in your lifetime, except maybe on a misty day on your walk in the forest. Well, guess what? Silicon Valley now has 91 unicorns. 91 unicorns. In fact, they're not even all unicorns. Some are decacorns. Some are hectacorns. A unicorn, by the way, means it's a private company, has not gone public yet, but it's valued at $1 billion. $1 billion with a B, $1 billion or more. So in 2019, we saw, guess what, 20 new unicorns in Silicon Valley, 20 new unicorns. San Francisco saw 21 new unicorns. The East Bay had 3, and so that brings your total to 44. 44 brand new unicorns over the last calendar year. It's just extraordinary. Now, as we describe all of this economic activity, it probably won't surprise you to know that construction is in a boom period. And my gosh, it's really happening. Look, this is what's happening. In Silicon Valley, we completed 8 million square feet of construction. Completed. It's done. People have moved in, the land has been claimed, and 8 million. That figure, 8 million square feet, is bigger than the previous 13 years combined. That's the sort of thing going on. And then in the pipeline still, there's 12 million more square feet. So the total is going to be something like 20 million square feet coming online. We just haven't seen anything like that. And by the way, I have to let you know that this is actually personal. This is a construction project that's happening right outside our office. And this is going to be a 20-story tower that's going up. And by the way, we have become victims of this incredible building boom. This is our office at 100 West San Fernando, and as you can see, we've been evicted. Everybody in the complex has been evicted. Jay Paul bought the property, and the whole thing is coming down. It's coming down, and so we're homeless. We're looking for a couch because we can't afford the real estate anymore. It's actually out of reach for us. It's been a big problem, and this is what's happening instead. And I show you this picture. This is what Jay Paul is going to construct on City View Plaza, where we are currently located. It's going to be a three-tower complex, and those towers are, I can't remember, 15 or 20-story towers. It's interesting to me because there's so much construction going on, but it's a particular kind of construction. In Silicon Valley in the 70s and 80s was not known for this. Let's be clear. It was known for building very functional buildings that were temporary in nature. They never won any architectural awards, I'll tell you that. But more lately, in the past 5 years, let's say, the construction has turned into these amazing, iconic structures. It sort of feels like it sort of feels like Florence at the time of the Renaissance. That's what Silicon Valley is coming to feel like. This, by the way, is what City View Plaza will look like when J. Paul's finished in just a couple of years. So that's happening. It's really interesting. Also, this boom that I'm describing is moving into the realm of hotels. We've added 36 hotels over the past 3 years in Silicon Valley. That's a lot. 5,000 new hotel rooms have come online, and there's more in the pipeline. By the way, when people build, it is a sign of confidence. I probably don't have to explain that to you, but when you're actually constructing something, it's because you have the confidence that the economy will be behind you and that it will take occupancy. And that's the judgment that our developers are making, and they're making it in droves. We've never seen anything like this. Okay, well, that's how the innovation engine is firing. So it's a pretty good picture. The picture that we've painted for you is one of the most dynamic, prodigious economies on the face of the planet. That's a true statement. I'm not being excessive when I describe it that way. But now let's shift gears. Let's ask this question. What is it like to live here with all of this explosive economic growth happening around us? So let's spend the bulk of our time now talking about that. What's it like to live here? Well, let's start with our most precious resource, and that would be each other. That would be the people that live in Silicon Valley. And this, I just have to say, is something that I cherish, maybe more than anything, about Silicon Valley. That we are the nation's most diverse population. And here you see it. We don't have a majority population anymore. We are a minority population. It used to be a majority white. That's no longer the case. Whites now comprise 33% of our pie. And whites have been overtaken by Asians, who now comprise 35% of our pie. And then 25% of our population is Hispanic, and then the rest is other things, other categories. So this is the most richly diverse place that we can describe. It's also wonderful as we look at our population. We have lots of population charts in the index. We recommend them to you, but it was nice to see that finally, at long last, there are some incremental gains being made by women in our population and in our workforce. They're taking a greater part in our technology companies and in our tech growth. This, for example, is showing you the roles that women are playing at the 10 largest tech companies. And so you'll see, for example, they're holding 26% of the leadership positions. You might say that's not enough, and I do too. And yet, these numbers are growing from what they once were, and so we can report incremental progress. And women are now 45% of our overall workforce. Well, that's one thing, our population. Now, here's another thing. What's it like to live here? Well, there's something to this notion that when you come to Silicon Valley, it really does provide you a path to prosperity. How do we know that? Well, we can check income figures, and here they are. These are the average annual earnings. So you take all of the people out there that are in the workforce, and you total up their compensation, salary, wages, stock, and options, and bonuses. And this is the number that you get, 146,000 per person in the workforce. 146,000, that's the average. That's the average number. Let's put that in perspective. You can see the national average is 69,000. We are double the national average in Silicon Valley. This is an extraordinary figure. Measuring averages, of course, is not always the most telling indicator because we have so many high earners in Silicon Valley. We'll talk about that. So we also look at income in other ways, and you have it in the index, but one way is to look at median household income. And remember, median is when you found that breaking point. Half the households are above that, and half the households are below that. And so what's our breaking point? 125,000 per household in Silicon Valley. And again, that's just, it's more than double the national average, which is 61,000. So that's pretty extraordinary. There are a lot of highly compensated people in Silicon Valley, and this chart is telling you that. There are also a lot of people in Silicon Valley that are not highly compensated. And so one finding that we must duly report is that our income disparities are becoming more sharply pronounced than ever before. For example, this is telling you that in Silicon Valley there are now about 65 billionaires. billionaires. And then in Silicon Valley, there are about 126,000 millionaires. How do we know that? Well, because we stop people on the street and we ask them how much money they have in their bank account. Actually, there are complex algorithms that are carried out by people in the financial sector, and they've shared the data with us. But if you take all of the people that have $1 million or more in disposable assets, we're not talking about their house. We're not talking about their home value. We're talking about disposable assets, and there are 126,000 millionaires or more in Silicon Valley. So that's pretty remarkable. In Silicon Valley, we've learned that 13%, that's the top bar, 13% have 75% of the wealth. That's what we've learned. And then in Silicon Valley, we've also learned the other thing, which is that the bottom half, the bottom 53% of our population hold 2% of the wealth. Okay, 13% have 75% of the wealth, and then the bottom half hold 2% of the wealth. So there's your disparity, and it's never ever been that pronounced. So we're growing in Silicon Valley, and we're growing by high-income households. That's what this chart is showing you, and the growth is precipitous. Look at this. See, there are so these are households that were added into our mix over the past year. And these are households that are earning more than $200,000 a year. And it turns out that about 65% of our households that we added last year are in that category. But look at this other. This shows you that we're hollowing out the other categories. They're not even growth positive, they're negative. We're losing households in these other categories. People that are earning less than $150,000 a year, people that are earning less than $50,000 a year, all of those are vanishing on the Silicon Valley landscape, and that's striking. It's also striking that poverty is persistent in our region. The poverty level is about 7.1%, and it's holding steady, and so you could say that's good news. On the other hand, we don't actually like the federal poverty standards because they don't factor in our high housing costs. And so we like to look at the self-sufficiency standards, and that's another measure that's been forwarded by the academic sector. We think that's more telling. And by the self-sufficiency standards, we've learned that about 30% of our population are not meeting self-sufficiency standards. By that I mean, in order to subsist, they are receiving some form of assistance, and that would be family, friends, a church community, or government assistance. So 30% of our population are in those circumstances. Homelessness continues to rise in our region, and this is probably the saddest indicator that I could possibly share with you. There's the number if you're curious to know. 11,000 people are homeless. And 21% of those, you can see the darkly shaded bar, 21% of those are in some form of a shelter most nights of the year. The rest, 79%, unsheltered. They're on the streets. So here in Silicon Valley, amid all of this wealth, we have 11,000 and change who are homeless. When you add in San Francisco to the mix, they have another 9,000. And so there are about 20,000 people who are homeless in in Silicon Valley, and 20,000 people. You know, that's a city. That's a city the size of East Palo Alto, for example. That's what we're talking about in terms of our homeless population. Well, that leads to housing. And so let's talk about housing. This is, of course, a subject of infinite expanse on the one hand. On the other hand, you could just say it's an easy subject. There's nothing really to say about it. That's it. We have the nation's highest home prices. We give you all kinds of charts and graphs in the index, and I recommend them to you. We can measure this any number of ways. But this is the headline. And any way you slice it, any way you dice it, that's the bottom line. We have the nation's highest home prices. This is measuring it by home sale price, and this is measuring it by your monthly median housing costs. And it turns out that across the entire nation, the highest communities are right here in Silicon Valley. That continues to be the case. This sort of dramatizes it for you. Here's a chart that's showing you the cost of homes in our region. These are median home value estimates. So let's say in Silicon Valley, the median priced home is about 1.2. We've broken it down by county: San Mateo County, Santa Clara County, but call it 1.2 million. That's your median home price, okay? And if you were to buy that 1.2 million house, your down payment would be about $260,000 in change. That's your down payment for that median priced home. Of course, you could buy any house in the rest of the country just for that down payment. The down payment will get you a house outright. You can buy it in cash in any of the other 49 states. It's pretty remarkable. So that's interesting. The rental rates are holding steady, so you could say that's a piece of good news. You could say that it just got as crazy as it can possibly get, and now landlords are understanding that's it. They've reached the breaking point, and so they've held steady. We're not selling very many houses. The inventories are down. We used to have about 4,000. We used to have about 7,000 or 8,000 houses in the inventory every month. Now we're down to about 3,000 or 4,000 houses every month. This is a chart showing you the percentage of home buyers that can afford, that can qualify for the median priced house, and that percentage is about 28% in our region. This is a chart showing you the entire country, and it's measuring burden. That's a technical term. Burden means whether or not you are spending more than 30% of your income on housing. And in California and Silicon Valley, 41% of our population is spending more than that on their housing. And that's, of course, fueled by Silicon Valley because of these prices. This is my friend, Officer Brinton. He is on the police force for the city of San Mateo, and he has to drive in from Oakdale. That's where he lives. And he drives in, and he started sleeping in his car because they can't afford anything here, and his family's there, but he has to work here. I can't remember, 4 days out of 7. He works 4 days, he's off 3, 4 days off 3. That's how that works. So anyway, he's just sleeping in his car because that's the only solution. Well, when that came to the attention of others of the police force, they decided to take this fire station, which is now out of use, and they have converted it into barracks. And they are stacking up police officers in there on bunk beds, just stacking them up like sardines. That's what's happening in Silicon Valley. So that's interesting. It's a tough environment if you want to be housed. So it raises this question. This is the premier question, right? What are we doing about it? So let's take a look at what's happened. So if you want to improve the housing situation, there's really only one way to do it, and that's to build more housing. You need to increase the supply of housing. Okay, there's an applause line. So the question is, are we doing that? Are we approving more housing? And this is a sad chart. This chart is telling you that we did not. In fact, the number was about 7,000 units, and it fell. We approved more than 9,000 units last year. This year, it dropped. We only approved 7,000 and change, 7,000 new units. And you can see the breakdown between single-family and multi-family units. So we're not making progress. And I just want to remind you this chart I showed earlier. We have to juxtapose it against this. See, this is our job growth over that 9-year period. There's our job growth, extraordinary. This chart plots our job growth against the number of housing units that we permitted and approved with each successive year. And you can see the disparity. That's what's going on. So high job growth, that's the green bars. Very few housing units approved. Those are the yellow bars. Over the 7-year period, 2011 to 2018, this economy in the Bay Area added about 820,000 new jobs. Do you realize that's a city the size of San Francisco? That's what happened. Over 7 years, we added another San Francisco to our region. Over that same period of time, we permitted 172,000 houses. That's a mismatch of 5 to 1. 5 to 1. So there's the crux of your problem. That's the problem. Now, by the way, just for your interest, the question is, of the units that we are approving, how many of those are affordable? Well, last year, that number was 17%. So 17% of those approved units were categorized as affordable to regular folks. That was a total of 3,000 units. And then how many were affordable to people that are making less than 50% of median income? We built 1,400 of those. So that's your story. That's what's happening. There's this thing that lots of you have heard of. It's called the Regional Housing Needs Assessment. RHNA is the abbreviation. These are housing figures that are handed down to us by the state. In other words, we are mandated to provide this number of housing units, city by city. Well, guess what? We're only accomplishing 56% of it in Silicon Valley. That's it. So of the housing units that we were mandated to provide, we're getting about half of them. And of those, they're not affordable. They're not affordable. Here's the housing that we did create, and as you can see, most of it is the high-end housing. It's luxury housing. So we're doing that, but we're not creating the affordable housing. And one result is that you have people that are having now to live further and further away. And so we now have people working in Silicon Valley, but they live in Manteca, in Tracy, and across the Altamont, and in Hollister, and in Los Banos, and so on and so forth. And these become our mega commuters. And it turns out that we have 101,000 of those. Mega commuters are people that commute more than 3 hours per day. 3 hours. They're coming into our region. And that's about 6% of our workforce. In the whole Bay Area, we've got about 260,000 mega commuters. And so you might wonder why we have such serious traffic congestion. Well, that's one reason right there. So that's your housing picture. It's a complicated picture. Nevertheless, I want to point out that some things are starting to change. And so I want to say just a brief word about that, because it is significant that in Silicon Valley, we're not just sitting on our hands. You could say that we did for a long time, that we were in denial about this, but that's no longer the case. These things are happening, and these are major developments, major breakthroughs, including some very aggressive and strident legislators that are trying to pass heavy-handed legislation that's been controversial. Let me stipulate, but there are people that are now starting to take an urgency to this problem, so that's happening. It's very significant that this group was formed, comprising our region's leaders, that they passed a compact. The compact might be controversial, nevertheless, it was passed, and now this is the platform for our region and our region's leaders at the Transportation Commission and the Association of Bay Area Government. They're going after all 10 of these things, and they're doing it aggressively. So there are things happening. I also want to point out that the activity is not limited to the public sector, and this is significant. The private sector has taken extraordinary measures, and they've been doing this for a long time. I mean, the private sector has created the Housing Trust for Silicon Valley, generating millions for housing. They've created this organization. This grew out of the Silicon Valley Leadership Group. It is now freestanding. It's tackling all these complex policy problems. But then this was the big headline this year. And this was remarkable. These three companies came together, and between them, they have made $4.5 billion available for housing. Remarkable. It's absolutely remarkable. Yes, you can applaud that. So thank you, Google, Facebook, and Apple, for this extraordinary measure. Now, here comes the question. You might think that $4.5 billion would solve the problem. That's a lot of money. We did some arithmetic just because we wanted you to have a sense of how far this is going to go. So the question is, how much does it cost to build a house? What does it cost? Well, I won't take you through all of that, but there's material costs, there's labor costs, there's all the fees. The fees are a big cost item. There's the land, that's the biggest cost item. And then there's all these additional cost drivers, including especially the impact fees that, boy, we can tell you all kinds of stories about the impact fees. Anyway, it basically costs about anywhere between $450,000 and $850,000 to build an average size unit of housing. That's your figure. So then we did the long division. And thanks to the generosity of these companies, we estimate that their $4.5 billion will build about 10,000 houses, which is absolutely fantastic. But it's getting at about 10% of the problem. That's what you need to know. Because the estimated need is 151,000 houses. That's how far we are behind. So that's a difficult story. Okay, so all of that happening. I'm going to blow through these because I'm running out of time. I'm just going to tell you what you already know, that transportation is our other Achilles heel, and it continues to plague us. People are not taking transit. We'll just point that out. Despite valiant efforts on the part of our transit providers, our transit ridership is decreasing as a total share. We continue to prefer driving alone in our automobiles, so the hours of delay continue to increase. Over the past 15 years, our average commute time has grown by about 6 minutes. Just 6 minutes. I mean, it's now taking us about a half hour to get to work. It used to take about 23 minutes to get to work. Well, we did the arithmetic there too. If that means that just because of that increment, that 6-minute increment, you, the average commuter, are spending 52 hours, extra hours in your car. That's more than a work week, just because of that increment. So that's all interesting. We won't talk about this so much. I'm going to blow through these because I want to talk about the last issue on our agenda, which is to say that, let me just tell you that here in the transportation realm, we are not standing idly by either. Our leaders have risen up, and they're taking very big measures, and these are the things that we've done already. And even though we just passed, for example, Regional Measure 3, our leaders have come together again, and they're putting together a mega measure, and the hope is that mega measure is going to generate billions and billions of dollars for new transportation infrastructure projects. And so even though the indicators are grim, there is also activity coalescing around these vexing problems. Well, that's what it's like to live here. But in the very few minutes that I have remaining, I want to raise one final question. I want to frame it this way. I think everything I've been telling you so far is perfectly fine. It's like a doctor just going through the annual physical examination and telling you what's happening. And yet, I don't feel like we're really telling the Silicon Valley story if we gloss over some of the big, amazing things that are happening to our region in the cultural realm. In other words, in a realm that we can't actually measure with indicators. And what I'm talking about here are things like techlash, right? This notion that now Silicon Valley isn't actually well perceived in the rest of the nation anymore, that our tech companies are being perceived as malevolent players as opposed to virtuous ones. And so now we have this siege, this sense of siege that is settling in on the region. So I just wanted to say a brief word about that. Our reputation has really taken this hit. I mean, look at this. This is what people are saying about Silicon Valley today. And it just didn't seem right to talk about the region without acknowledging that this too is going on. And it raises really important questions. And I think in all of the indicators, as we look at them, if we think about long-term trends, there is some sense that some of these things could actually alter our long-term comparative advantage, and it's worth thinking about. I'm just going to tee it up in a clinical way. These are controversial. These are controversial subjects. But for example, I told you that venture capital is thriving at record-breaking numbers. But what I didn't tell you is that most of that venture capital is going into mega deals. Now, this is interesting. You might have thought that the venture capital was going into small startup companies, as it has historically done. But actually, the venture capital story today is that more than half of it is going into the mega deals. These are the big deals, going not to your scrappy startup, but going to these well-established, yet privately held companies like Uber, like Lyft, like Airbnb. 92 mega deals in Silicon Valley over the last year. Now, is that a problem? I'm not saying that it is, but there is this corresponding indicator which shows you that the startup activity is at an all-time low. That's interesting. This is a chart that's showing you that the number of companies that are qualifying for seed funding and the early stage funding, the A and B rounds, is at a historic low. 45%. I'm sorry, 45. That's a raw number. 45 companies. That's remarkable. We've never seen anything like that. And by the way, all of that job growth that I showed you, the 29,000 jobs, that's an extraordinary number. But guess what? 80% of it, 80% of the tech growth, 80% of the new tech jobs were just 5 companies. And those are the companies right there. And they are big behemoth companies: Apple, Facebook, LinkedIn, and Amazon. Actually, Amazon grew the fastest of all of those. So that's interesting. I talked to you about the commercial space. Well, actually, most of that is commercial space being taken up again by the big 5 tech companies. 20% of all of the commercial space out there is now claimed by those big 5 companies. Those companies are acquiring startups at a pace that we've never seen before. And so this raises interesting questions, an interesting dialogue that we should be having, and that most of the country is having about us. And so that's also interesting. In fact, I would like to say that the question most Valley watchers are asking is, what is this effect? What is the big tech effect? And is it going to change Silicon Valley's historic advantage? Now, we won't get into that. We don't have time. In fact, that's not my purpose here, but we just want to tee it up. There are some people that say it's not a problem. It's absolutely not a problem. And these would be the reasons why. But there are other people that are saying, no, actually, this could be highly significant, and it would be for reasons such as this. And so this is the kind of dialogue that we're going to tee up. You're going to be hearing from Professor Margaret O'Mara momentarily. She'll be talking about these issues. We'll be talking about our landscape and how we address the frenzied lifestyle that that's creating for us in this amazing, prodigious economy. So we're teeing up all of that for you as well. I'm out of time. I'm completely out of time. So we're just going to, we're going to blow through this. Actually, I'll end here. This is my last observation. For the first time in Silicon Valley, we are observing that more people are leaving the region than are coming in. And we thought that was just an abnormality, but now that's been the case for 4 years in a row. Last year, we lost 8,000 people. That's a remarkable finding. Now, people come in and people go out, but the net is we lost 8,000 people. And that seems to be an intensifying trend. We turn over our population about 5% every year. And you're probably saying this. Just think about all of your friends at your schools, in your neighborhood, at your church group. 1 in 20 are leaving. That's certainly my experience. I'm observing that. 1 out of 20 people are leaving the region. So that's interesting to note. And here's a survey showing that 40% of respondents are saying they're making definite plans to leave Silicon Valley. Okay, out of time. There it is. That's your quick and dirty roundup of what happened in Silicon Valley over the past 12 months. That's it. For the rest of the day, we're going to decide if this is a happy halcyon place or if this is a frenzied place, or if it's just complicated. Ladies and gentlemen, thank you very much. The Index at Silicon Valley.